Corpbiz.
Taxpayers continue to grapple with the changes introduced by the government every now and then, especially in the taxation regime. Just when the taxpayers seem to be getting a grip over the technicalities surrounding this nascent and ever-evolving world of GST, a wind of change blows and the taxpayers are left perplexed all over again. Up until now, businesses had the opportunity and an option of reducing their overall tax liability by availing ITC if they fulfilled the prescribed conditions. However, CBIC notified certain changes in 2022, and in pursuance of the same, a new clause AA has been inserted in Section 16, subsection 2 of the CGST Act. Welcome back to the Corpbiz YouTube channel. My name is Pratibha Sharma, and in this video we will discuss how this new insertion affects the businesses and whether it will change the way they can avail ITC or not. So in 2022, yet another change in the GST laws was made by introducing two major amendments in the form of a new clause that was added to Section 16, subsection 2 of the Central Goods and Services Tax, that is the CGST Act, and by placing a restriction on the provision of ITC, that is input tax credit. These stringent measures were introduced by the government to further augment the revenue being generated. But first, let us understand what is an input tax credit. Input tax credit, popularly known as ITC, is an essential part of the GST regime, and availing of ITC is very crucial for every business in order to settle its overall tax liability. In relation to taxation, it is the tax that a business pays on purchase, which can be later utilized by that business to reduce its tax liability when it makes a sale. It implies that businesses, by claiming credit to the extent of GST paid on purchases, can reduce their overall tax liability. All three acts, that is CGST, SGST and IGST, have a provision for ITC. However, as easy as it may seem, claiming ITC can be a Herculean task. Now let us take a look at how to claim input credit under GST. Well, not every business or taxpayer can claim ITC on its whims and fancies. There is a law and procedure in place that elaborates when and how a business can choose to claim ITC and take advantage of the purchases made during the tax period. The law comprehensively lays down the conditions and scenarios under which such a claim may be allowed. Section 16, subsection 2 of the Central Goods and Services Tax Act explains these conditions that are required to be satisfied by the recipients before claiming ITC in their returns. Now, according to the said provision, a registered person shall be entitled to take advantage of ITC if he is in possession of tax-paying documents such as tax invoices or a debit note or other tax-related documents issued by the vendor or supplier registered under the Act. Another scenario is if he has received or deemed to receive goods or services or both, if he has paid the tax charged on the invoice to the government either through cash or by utilizing ITC, if he has furnished the return for the tax period, so then who is ineligible to claim ITC? Failure to fulfill the aforementioned conditions will make you ineligible to claim ITC. Well, apart from this, there are certain cases in which you still cannot claim ITC, such as in the case of composite dealers, on purchase of capital goods that are used for non-business purposes, on purchase of capital goods that are to be used for manufacturing exempted goods, blocked credits, purchase of goods and services for private use, purchase of services and goods to construct immovable property for personal or business use. ITC cannot be claimed on motor vehicles having a seating capacity and capability of fewer than 13 people, or leasing, renting or hiring motor vehicles, etc. On purchase of food and beverages, catering, health services, plastic surgery, etc. Now let us discuss the amendment in the law. The Central Board of Indirect Taxes, via a notification in December 2021, notified an amendment through which Finance Act 2012 has inserted a new clause AA to Section 16, subsection 2 of the CGST Act. Let us try to understand this amendment in two scenarios, that is the pre-amendment and the post-amendment scenario. Well, in the pre-amendment scenario, the vendors or the suppliers were required to include such invoices in their GSTR1, which was then auto-populated in the form of GSTR 2A of the recipient. And after being included in GSTR 2A, the taxpayer could claim the ITC on these goods and services. Furthermore, another rule that governed the provisions of ITC also allowed the taxpayer to claim a certain percentage of the total ITC even on the basis of invoices that have not been uploaded by the supplier in his GSTR 1 return. However, post-amendment scenario is different. The amendment has strictly introduced one more condition for availing ITC, which is for a registered person to avail ITC on an invoice, the same must be reflected in Form GSTR 2B of the registered taxpayer. What does this mean? Well, this amendment has basically prescribed an additional condition that in order to be eligible for ITC, the details of the invoices issued by the registered supplier must be reported by that supplier in his outward return and then must be communicated to the registered recipient. With this amendment of rules, the government has ensured that there is symmetry of information furnished by the suppliers and recipients, as well by ensuring that every invoice generated by the businesses enters the GST data, and thus every business transaction can be monitored. Additionally, the government has done away with the provisional ITC, as earlier recipients could claim a certain percentage of this total eligible ITC even if certain invoices were not uploaded by the supplier in his return. However, this is no longer allowed. There is no scope for a mismatch of invoices between the suppliers and the recipients. So what are the effects of the amendment in Section 16(2) of the CGST Act? Due to the implementation of this amendment, now a registered taxpayer can claim ITC only if the corresponding supplier or vendor has uploaded such invoices in his GSTR 1 and the same is communicated to the recipient through GSTR 2B. Well, first is no provisional ITC. Therefore, the rule that earlier allowed the recipients to claim a certain percentage of eligible ITC even if certain invoices have not been uploaded by the supplier is no longer applicable. In the absence of such provisional ITC, the tax liability is bound to increase, which will negatively impact the profitability of these businesses. Thus, every invoice must be uploaded by such a supplier for the recipient to avail ITC on such invoice. Second is additional responsibilities on the recipients. This amendment has introduced a set of additional responsibilities and conditions that are required to be fulfilled by the recipients now in order to claim ITC. This might be burdensome for a lot of recipients who will now have to ensure that their respective suppliers also comply with these rules and regulations in order for them to be able to obtain ITC. Difficulty in communication. Well, taxpayers who would earlier rely on the last-minute communication will now have to ensure that reconciliations are real-time and more frequent than ever, which might require some technological intervention. Otherwise, the entire tracking and reconciliation process is bound to get cumbersome and difficult. So in conclusion, ITC is very critical for every business in order to settle its overall tax liability. And many businesses used to rely on the 5% provisional ITC which was available to them in case there was a mismatch of invoices uploaded by the suppliers and the receivers. This allowed them some relief and breathing space at the end of the tax period. However, with changes brought in Section 16 subsection 2, the benefit of provisional ITC is no longer an option, and this has placed an additional burden on these businesses to now ensure that there is an effective and frequent communication channel established with their suppliers in order to ensure compliance on their part as well. Now, taxpayers have an additional responsibility to check and ensure that their suppliers are also filing their returns correctly and uploading their invoices in their return so that there can be a reconciliation of the data in GSTR 1 and GSTR 2A for them to avail ITC. This may seem difficult and time-consuming for the recipient taxpayers as they will have to face various challenges while ensuring compliance. And if you find yourself caught in the intricate web of taxation, you may take expert advice or hire professional help by contacting our experts at Corpbiz by calling on the number flashing on your screen. That is it for this video. Stay tuned to the channel for more such informative content. Thank you.